The markets had a good day today. Dow Jones up 249 points. But ask yourself, is it real? What is really happening here? These markets right now are pricing in a 50 basis point rate cut in September. These markets understand that they are solely dependent on the Fed and Jerome Powell now, not on the economy. They are solely dependent on rate cuts and quantitative easing. It's Monday, August 19, 2019. I want to get right into it today. Dow Jones up 249 points. Good day for the markets. But what's really going on? In my opinion, these markets are so detached from reality that the economy has nothing to do at this point with these markets. These markets are like drug addicts, completely dependent on their next fix. Their dealer, Jerome Powell and the Fed, is standing by with the next fix. It's going to be a half-point cut in September. And these markets know it. They are pricing in the next fix. If Jerome Powell and the Fed disappoint and not cut rates in September, these markets crash. Repeat, they will crash. That's not going to happen because Jerome Powell is going to inject the heroin, going to inject the drug into this patient to keep it going. But here's the problem that we all have to really think about, that most people, it seems to escape their memory, that the Fed is running out of ammo, that unlike 2001 and 2008, the Fed has very limited ammo right now. Most people forget to think about that. They forget that. But if we get a 50 point basis cut in September, this will leave the Fed with 6 25 basis point rate cuts to play with. That's a point and a half. In 2007, it took 500 basis points to stop the bleeding. Ask yourself, with limited ammo that the Fed has, the limited ammo that they have to work with, and so much ammo that would actually be needed to get out of a recession, why are they wasting these rate cuts with markets at all-time highs, unemployment at 50-year lows, and wage growth? The market is reliant on the Fed. Things are not as good as you are being told. They are going to waste points in this booming economy with unemployment at 50-year lows, wage growth, and near highs on the Dow Jones and in these markets. Why are they wasting these cuts if things are so good? People, you need to really start asking yourself these questions. We've got some more news that I want to talk about. This is on Zero Hedge. This is a very good article. Barron's nonsensical idea, cut rates like mad to avoid recession. This is a Barron writer. His name is Matthew Klein. He believes that cutting rates fixes the problem. And in the article here, it says that 0% rates didn't stop the half dozen recessions in Japan in the past decade. Negative rates aren't stopping recession in Germany. If the Fed cut 100 basis points, a full point now in September, what does that do? Does it stop the recession? And if it does, how long? 0 months, 6 months? And to what expense is this going to cost America as you're devaluing and destroying what's left of the US dollar? What then? Negative mortgage rates? A 10-year yield of negative 1% like in Switzerland? And if that doesn't work, now what do we do? We are running out of ammo. We are running out of options. Central banks are the source of problems, not the cure. If central banks could stop recessions, we would have never had one in the first place. And we are heading into one right now as it has begun. I want to go over a few more articles here today, and I'm just going to reinforce some facts of why things aren't so good. And this isn't to scare anybody. This isn't to be negative. I'm a realist. If there's some really great news out there, please share it with us. We could certainly use some good news, but the bad news continues to outnumber the good news. Wall Street Journal today. Here it is, Wall Street Journal. Make sure you're doing your own homework. Make sure you're doing your due diligence. Make sure you confirm. Whoever you're listening to, confirm those stories. Do your research. This is coming out of Elkhart, Indiana. This is a industry that really, I believe, affects the middle class here, and it's the RV industry, recreational vehicles. And in the Wall Street Journal article here, it says shipments of recreational vehicles to dealers have fallen 20% so far this year after a 4.1% drop last year. So from last year to this year, we're looking at 24.1% drop in deliveries to dealers. Michael Hicks, an economist at Ball State University, said the RV industry is better at calling recessions than economists are. He says that softening consumer demand for RVs coupled with rising vehicle prices suggests the economy is either in a recession or soon headed for one. 65% of all recreational vehicles are made in the Elkhart, Indiana region. And they said that they're seeing a slight tick up in unemployment now in this region, and a very small percentage of hours being cut back with the average workers there. Again, this is a middle class type industry where you need to be somewhat middle class or upper middle class to afford a recreational vehicle like this. So if the middle class isn't coming in and buying recreational vehicles, what does that tell you that is happening in the middle class? They are slowing down. They're not going out and buying like they once were. And we're seeing a real slowdown in the middle class. I believe the middle class is going to be the most affected class with this recession. It is really going to annihilate the middle class here. And we're starting to see more warning signs of that. This is just another canary in the coal mine. Here's another article, Zero Hedge Today, Michael Snyder. He says that in this article, a transportation recession usually precedes a recession for the entire economy. The debate is over regarding a transportation recession. Recession has begun. We are in the recession right now. There is no more excuses to what's happening in the transportation industry here. ACT Research President Kenny Veith. The technical definition of a recession is 2 consecutive quarters of negative growth. Every freight metric we looked at has been negative for at least 6 months. Michael Snyder here says, as I have been documenting for months, just about every economic indicator is telling us big trouble is ahead. What is coming to America is going to be extremely painful, and we are about to reap the consequences for decades of foolish decisions. Again, be very careful with the decisions you make today because they're going to affect your life tomorrow. And this country and many people have made some very foolish decisions over the last couple years, the last couple decades. And this entire country is going to pay the consequences now for living on a credit card, for living beyond its means, for borrowing money that it cannot pay back. We are going to feel severe pain. Here's another article. This was on CNBC. This was actually also an interview that CNBC did. Tillman Fertitta. He owns restaurants, casinos, and they interviewed him. And he says he is doing things in a conservative way because of concerns over a potential recession. He says history always repeats itself. We are going to get a recession. He says in the interview, remember, everybody fills their tank. You can only buy so many new cars. You can only buy so many new TVs. You can only lose so much in a casino. So at some point, the consumer is full. They used up their credit cards. I think we are getting to the end. Every single city and every person that I've talked to, and this is what Tillman is saying, every single city and every person that I've talked to in Europe said that their businesses are down around 20% this year. And this will affect the United States of America. This is Tillman Fertitta. He owns casinos. I believe he owns the Houston Rockets. He owns restaurants, very, very wealthy. And he says he is playing it very conservatively now, as I believe that all of us need to be doing also. Here's an article in the AP. 74% of economists in survey see U.S. recession by the end of 2021. Do your homework, do your due diligence. It's all out there. And now we have markets. We have a bank run, multiple bank runs taking place in Ghana. 23 savings and loan companies, about 1/3 of the banks in the country are closed. They're done. They're history. 70,000 investors are now collateral damage from Ghana's banking cleanup. People cannot get their money. Nobody's answering the phone. One gentleman says here in the interview, if I knew this would happen, I wouldn't have gone there. It goes back to the saying that we talk about all the time. If you don't hold it, you don't own it. You can never trust your money in anybody else's hands but your own. And unfortunately, I know this is Ghana and people will say it's no big deal, but this is happening all over the world. It's going to continue to happen. We're seeing negative mortgage rates, negative interest rates. We're seeing bank runs. We're seeing violence. We're just seeing so many things happening throughout the world. It's coming to America. We'll probably be the last one to get hit, but when we get hit, we're going to get hit the hardest. We are the biggest debtor nation in the entire world, and we're a country that I believe has abused the world reserve currency, the U.S. dollar. We've abused nations throughout the world. We forced everybody off the gold standard and onto the U.S. dollar, basically enslaving as many countries and controlling as many countries as we could with this U.S. dollar. And now I believe the U.S. dollar is going to be under massive pressure at some point. It may be the least sickest kid in the hospital right now, but let's not forget, it has lost 97% of its buying power here in the last 50, 60 years. The U.S. dollar is dying. And I believe every one of you need to be protecting yourself. So I'm going to wrap this video up on this beautiful Monday evening. But before I go, I just want to touch on a couple points. I actually made another purchase of silver today. And I believed it was a good day to take some of my phony Monopoly money, some of my phony paper Monopoly money, and convert it into real money. The metal markets pulled back a bit today, so I thought it was a good day to get in. And I know people will comment and say, oh, look, the metals are pulling back, the market's back up, everything's okay. That's fine. If you believe that everything is okay, if you believe the central banks are going to prevent this collapse, continue to stack paper, continue to buy stocks, and continue to buy 10-year bonds at 1.6%, a whopping 1.6%. Yeah, of course there's no trouble, right? 10 years, 1.6%. There's nothing to see here, folks. If you believe that everything is okay, I believe you're living in the Matrix. I don't live in La La Land. I live in the real world. I believe the central bank is not going to prevent this collapse. They couldn't prevent the last depression. They couldn't prevent the last multitude of recessions. So how are they going to prevent this one? By doing the same thing that got us into the first one, borrowing money and keeping rates near zero or negative. They're going to try and get us out of this recession by doing what got us into this recession. Bottom line is, there is way too much debt here in America. We are not manufacturing enough things. People are not making enough money. They're not making enough wage at their jobs. We have too many people in the service sector industry, too many jobs there. We have too many people that are working for Lyft, Uber, Starbucks, medical aid assistants, and again, working at hotels. This is not going to support a healthy economy. People cannot keep up with inflation. They cannot keep up with the cost of living. It is a fact, period. Multiple people living in one house or one apartment. People financing cars for 8 years. I mean, come on, subprime car loans. Many people have commented down below telling me that they didn't, or their friends didn't even have to fill out a credit app to drive a car off the lot. I mean, we are getting back to what was happening in 2008 in the housing market. They basically put a mirror in front of your mouth, and if you were breathing, they gave you a house. Now that's what they're doing in the auto market. We're also seeing subprime loans back in real estate. take a good look at what's going on. The auto industry, the trucking industry, the freight industry, the real estate markets, commercial real estate, residential. The list goes on and on and on. They are all feeling the pain. This retail apocalypse is getting worse. As you know, I was just in Vegas. Nobody, even in the luxury retail stores, they were dead. Okay? So I'm telling you from what I've seen in Orange County, what I'm seeing in Riverside County, what I just saw in Las Vegas, lots of people, but nobody seemed to be really spending money. The restaurants were maybe half capacity, 60% capacity. The stores were just ghost towns. Yet people think everything's going to be okay because the Dow Jones landed up in the green today. The Dow Jones may very well go to 30,000 points, no doubt. I believe it has the ability to do that. But people are staying in these markets too long to earn a few more percent. And these people are greedy and they're going to get absolutely annihilated. This is the time to be ultra conservative, to play it safe. Look, the Titanic is going down. If you live in the matrix and you believe everything's okay, if you believe the central banks are going to save everything, if you believe what the government is telling you, if you believe what these financial analysts are telling you, you are going down with the Titanic. This is why I believe it's so important to have gold and silver. Gold and silver is the lifeboat. And if you do not have a lifeboat, you are going down. We are heading into very deep, dark, cold water. And many people think that paper is going to save them. They think that their paper is going to be worth something. The only thing that's going to be worth anything during a collapse is going to be your preps. And monetarily, the only thing worth anything is going to be gold and silver. Gold and silver are your lifeboat. They are your emergency life insurance policy. They are protecting your wealth. This is real money. And if you don't have this lifeboat, you are going down with the ship. And I believe this ship is going down. So I'm going to leave it right there. We'll continue to see how things develop across the world here into tomorrow. But again, things I believe are very, very fragile. No matter how they try to sell this to you, take a real good look at what's happening in your area, look at your environment, look what's happening across the globe. And if they were not cutting rates, if they were not talking about quantitative easing, if they were not injecting these markets, where would we be right now? This is all artificial. It's all fake. Take a real good look at what's going on. Make sure you're holding something real, hard, tangible assets, gold and silver. Have a wonderful evening. We'll talk very, very soon. God bless every one of you.